Welcome to Porch to Portfolio, the podcast where real estate investing and purchasing come to life. I'm your host, real estate expert and broker, Beth Kristensen. Hi, welcome to Porch to Portfolio. And today we have Mike Cahill with Prime Lending with us. And I want to thank you so much for popping in today. We're going to talk a little bit about the fix and flip loan programs for that, as well as the ADUs. So, Mike, oh my gosh, the ADUs are the hottest topic right now. It seems like everybody is looking for a way to add income, and the ADUs have become like the big popular one. I think the thing I'm hearing the most about is appraisals and how you give value to an ADU for somebody to pull money out of their house to build it. What are you seeing on the ADU front?
It's a challenge. Basically, almost every state in California is allowing you to build an ADU on your property. They've changed the requirements.
Every city?
I'm sorry. Every city. Every city in the state of California is allowing you to build an ADU, which is an accessory dwelling unit. We used to call them grandma quarters.
Yeah.
You know, where
in-law houses.
In-law quarters. And basically what it is, it's a separate unit from the house that has living quarters. It's got a bathroom, a kitchen, and a living area.
Perfect.
There's a minimum size. There's a maximum size.
Yeah.
Each city is a little different requirement. It doesn't require separate meters. You can just tag on your current meter and your plumbing.
Perfect.
Which is great, especially if you're in the city.
Right.
If you're out in the country, that's what they would do anyways.
Yeah.
But so an ADU is a very good way of you adding potential income on that. And so what we're running up against, okay, is when we do a loan, we could do a loan and you have equity in your house. We then will refinance your house and give you some of that equity to build the ADU. It's considered a cash out refinance.
Gotcha.
You take the cash, $100,000, and you build an ADU on it. And now technically your house is worth more. So the first way of doing it is we just do a cash out refi to give you the cash so you take care of it and you control it and you build your ADU.
Which would change your rate if you were on a 2 to 3%
Correct.
Interest rate.
It's going to increase your rate, and it's going to allow you to maintain and build out and do that.
Gotcha.
If you don't have enough equity in the house to do that, what we can do is we call it a renovation loan. And what a renovation loan is where we take your after improved value to determine the current value of your home. So your current house is worth 5, but you put an ADU on it, it's going to be worth 7.
Okay.
And so we'll say once you build this ADU, it'll be worth 7. We'll use that as the value to determine how much you have to put down or equity we can pull out of the house.
Is this a government loan?
There's government loans and there's conventional loans.
Okay.
There's VA loans. There's jumbo loans. We have over 30 products for renovation, which enables us to lend on the future value. If you don't need the future value, you have enough equity now, it's easier.
Exactly.
But if you don't and you need the future value, we would lend on the future value based on the improvements you're going to make. You have to have a contractor. You can't do self-build.
Okay.
I don't care how handy you are. It's got to be done by a licensed contractor.
Right.
You know, you're going to have to get architect out there to do drawings and get bids for the amount of work that it's going to take.
And these are all prerequisites before we get the loan.
Before we determine the value. So when the appraiser goes out there, you're going to say, hey, I own the property now.
Right.
I own the land now. I'm going to build this on it, and here's the specs for it. And it costs $75,000 or $100,000 or whatever it is to do this. They can go in and determine the future value of it. And where we get into your question about the appraisal is typically when you do an appraisal, you have to appraise like property for like property.
Right.
And so if you're appraising a 2-unit property, you want to determine value, you have to have comp or comparable sale to another 2-unit property in the area.
Right.
Well, there's not a lot of ADUs right now.
Yeah, there's not.
And so until people start building these ADUs, you can't use them as a comp for an ADU. And so appraisers are struggling to determine the future value of that home with an ADU on it.
Right.
Because there is no comps to justify that value.
Yeah, because nobody's selling their properties that they've already built an ADU because that's where their future wealth is.
Correct. So imagine if you had a property that had room on it and you could put an ADU on it, which is, let's say, $100,000 to build the property and receive an extra $2,000 a month.
Right.
It's more than going to pay for itself.
Right.
And so it's a great option for you. The other option we do is, so if we can, we try to do the cash out refi.
Okay.
Because it's a much easier approach because we're just saying the value of your house is what it is.
Right.
And we're not giving you value for the ADU. We don't even know what you're going to do with the money. You could be paying off debts or whatever, and we allow you to do that. But we also get a lot of clients that see these fix and flip programs where somebody, they're going to come in, they're going to buy a house and they renovate it.
Right.
And the TV makes it look sexy and entertaining and everything.
Know.
But let me tell you, it's a marriage tester. It's a patience tester, and it's a financial tester. They're very challenging what you can do or not do. And so if you're going to be looking at that, we have, like I said, over 30 products. We could do conventional FHA, VA. We can do jumbo products where we allow renovation.
Okay.
And that's based on the future value of the home. And
so does the appraiser, though, give the value based on like a future income or a price per square foot and compare it? So let's say it's 1,000 square foot ADU. Are they comparing it to 1,000 square foot home on its own land?
That's the problem with ADUs. That's the challenge is no, they can't. And so they have to go out in a further area to find those ADUs. It's a great idea. It's just that right now it's not enough's happening on it to get people in it. So if we just do a regular refinance, give them the cash to build the ADU, that then becomes a comp for the next person that wants to do the renovation loan on it. And so, like I said. And
it's easier. Everybody has control of whatever they want to do with their own money versus the hoops of the architect and the permits and having the contractor and making sure that all the ducks are in the row for the ADU.
But we also do loans. Like we had a loan up in mid-California that got burned down by fire.
Oh, yeah.
This guy's house is nothing but a concrete slab.
Yeah.
There's nothing left. And he wants to live there. And so we were able to build a house on that property. And so he took the specs from the architect and everything and all the permits and determined the value was worth X amount. And we do what's called a construction to perm loan. So we give them the loan. And so basically we give them a loan for a certain percentage of the value after it's done.
Okay.
And we hold the money. And we give the money to the contractor to buy the materials, and we do a draw. And so we manage that for the client.
Okay.
And so the client's not trying to, deal with the contractor. They have to work with the contractor, but not paying the contractor. Not paying. And the contractor goes through us. We check the contractor and make sure they're licensed, they're bonded, make sure that they're not going to flake on you. Because we've seen it happen a lot. Take their money and run. But that's a way where people can build on a lot or rebuild a home is another way of doing it. And
so
at that time, they could add in,
loan?
It's a construction to perm loan. Or let's say you have a house that's needs a little TLC.
Yeah.
It needs work. It's dated. It's got green carpet and Formica kitchen,
which is really back in style. I hate to say, but
especially like in Riverside, the old town of Riverside. A lot of people are spending
carpets and
horrible condition in some of these houses.
Yeah.
And so buyers that can come in and buy that house, they're looking at it like, I'm barely rubbing nickels together to get in. I don't have any money. It's the biggest hurdle for buyers. Now they're going to rehab the house.
Right.
They don't have any money for it.
Exactly.
And they're not putting money down, so they'll have the equity to borrow again. So how are they going to do it? They're going to put it on their Home Depot credit card.
Yeah.
Well, now they're paying 20% interest. And
29%.
Yeah, it's crazy. So what we do is say, you can buy a property and we can do a rehab loan before you even move in.
Awesome.
And so it allows you to say you're buying that house and you want to put new kitchens, new baths, all new flooring, all new windows. You want to put all this stuff in.
Right.
We have a loan that it's called a renovation loan where it's worth $500 now. It's going to be worth $700 when you do all this work. We'll lend on $700.
Okay, perfect.
And it enables you to do that. And that is an awesome way of doing it.
Right.
Or we have people that own land and they want to build on it.
Right.
And when you do that, we can use the value of the land as basically your down payment. And so you don't have to come up with any money.
Perfect.
And you can then put on what you want. And you're controlling the contractor. We're not telling you what to put in it.
Right.
But if you got imported marble from Italy, the appraiser may not give you full value what you paid for it because that's not really, they're not going to be able to look at a neighbor's house and determine if they have the same type of marble.
Yeah.
So they're going to determine the value based on what you're doing, but it is based a lot on square footage and material.
There you go. Yeah, the square footage.
Because in California, we also have to be careful. It has to be specialized material because of our wind, rain, and fire.
Right. Oh, yeah.
And everything's got to be earthquake. And so having a new home is great, or a new material, because you have all the updated fancy stuff, so to speak. But you have to know what you're doing because you need to have a professional make sure you're going to get it done in the time frame that's needed. Right. And typically we give them a 6 months to a year to build that house out.
Okay, which is pretty typical time.
Pretty typical time.
Yeah.
But when you have rain like we're having now, everybody freaks out in California with rain, but it delays things because it's going to throw timing off sometime, and so it's a little bit of work. But that program, we are experts on it, and we can educate you on it. And again, we don't charge you money for all this information.
Right.
I am simply here to educate the client on options for them.
Yeah.
But it enables them to purchase a house and maybe put an investment on it, maybe fix it up, maybe live in it, maybe buy a vacation home at the beach. Great. We all want that. Or, the primary residence.
Exactly.
And so we enable them to do all these different finances, but they need to know who to talk to about it.
Yeah.
And that's where we come in and we educate them.
Perfect.
Because it's very important that they know what their steps are.
Exactly. So how is lending now? The state had just passed a law that you could sell your ADU without the land. It's kind of like a condo, but you're going to sell that ADU that is on the primary homeowner's property. How would you lend on that? Have you seen any loan programs coming? It's super new.
Yeah. No, I think you're going to run into a big problem.
Yeah.
And the reason is because they're typically sharing utilities. They're typically sharing, plumbing and sewer and electrical and garbage and all these things. It's not a second unit. It's an addition unit.
Right.
And so it's kind of in a gray area. I think it's going to be, I think it sounds sexy.
Right.
But I think the delivery on that is going to be very challenging because who owns that land?
Right.
If it's owned by the person, you can't, it's typically, then it's considered a mobile home.
Exactly.
And it means you can trailer it out.
Yeah.
If it's on a permanent foundation, it's going to be a challenge.
Well, it'd be like a condo, like a condo zoning, so where you don't own the land. But so I've had a couple investors who are saying, this is a great opportunity. If I could build like 2 homes on my half acre and sell those off and still keep the primary one as an investment or my primary, that might be a good money maker.
They can, but
because then they could take that money and buy duplexes, apartment complexes.
From the financing end, I think the challenge is the details are the devil's in the details.
Right.
Because I think the shared services are where you're going to have a snag.
Yeah.
Because you can't have and a condo is another challenge because there has to be typically a management company involved.
True.
So with a condo, if you don't have a management company or it's owned by the owner, it becomes very, very difficult to resell it. Because no lender will lend on it, and so it becomes challenging. So I think it's evolving.
Right.
I just like I said, when the market changed, programs came out.
Yeah.
You're going to see this come out. And I think it's a step in the right direction because California is difficult to build.
Oh, yeah.
And for them to open up, where they're saying the cities have to allow you to build now, is huge.
Yeah.
And I don't think the cities like it.
They don't.
But they have to do certain steps. And they have to get your approvals in a certain amount of time.
Right.
They have to allow you to do this.
Right.
And so it becomes a challenge. So a lot of areas like where I live has a small HOA. I don't have a pool or I don't have all this stuff, but I have a small HOA. So the HOA would have to approve this. And the HOA is made up of the members of the community. Will they allow me to put an ADU? Well, I had to ask my neighbors to put a barn, not a barn, but a storage shed in the backyard.
I know.
It's like, do you think they're allowing me to build an ADU?
Yeah.
So more than likely, I wouldn't be able to build an ADU there, even if the city said I could and the lender said I could.
Yeah.
But the HOA may put a kibosh on it because your neighbors are not going to want that because that's their view or whatever the case may be. So it's just the devil's in the details, but it is a great option for people, especially when they have a bigger lot.
Right.
My youngest son just bought a house a couple of years ago, bought a house up in Redlands. He'll have big lots.
Oh, yeah.
And he's got almost an ADU back there.
Perfect.
It's a storage shed, but they kind of made it look like his house.
Oh, great.
And so he's debating whether he should convert it to an ADU and perceive rents. And so he's just talking, just talking about it, but it's already pretty much done. And so it would be, it's already there. It's just great. And some of the inner city programs they don't have that ability to add on there.
Okay.
They're going to have a challenge. But the
Yeah.
ADU financing is an amazing option for the right person. And again, it's tricky. You have to get an experienced agent. You have to have an experienced loan officer. You're going to experience all these people to make sure what you're up against. And we ask for your patience too, because there's going to be a lot of challenges.
Yeah, it's going to be a long time. What about in the day, I'm going to say previous to 2008, the main way that people were buying investment homes where they were pulling out like on a HELOC. Is there, especially if you've got a 2 or 3% interest rate now on your main primary, is that HELOC market or the second mortgage market still a viable market?
Absolutely. And so what a HELOC is a home equity line of credit. And so basically it's a line of credit, it's kind of like a credit card, against the equity you have in your house.
Okay.
And you can do whatever you want with that.
Perfect.
It enables you to keep your first trust deed mortgage, which has typically a rate in the 3s or lower.
Yeah.
I think they said some study like 90% of mortgages are below 5.
I know.
And rates are above 6 right now, in the 6 range. Why would you do that if you could get the line of credit?
Exactly.
And the line of credit, though, is based on the prime lending rate.
Okay.
And the prime lending rate is 8.5 now, I believe.
Okay.
And so the rates are but it's going to be a heck of a lot cheaper than a Lowe's credit card.
I'd rather take an 8.5% on a smaller amount than refi my whole house.
Well, that's the start rate. And typically, depending on your credit, depending on the loan to value, you're going to have a margin adjustment on that. So you're looking at probably rates, 10 to 11.
Okay.
As a general rule. Sometimes we can get better rates than that, but you're going to look anywhere from whatever the prime lending rate is. Just Google prime lending rate, and it'll come up, and it'll tell you it's going to be that or above.
Okay.
Sometimes it'll say 6 months at, prime minus a half or something.
Gotcha.
But it enables you to do it. And the beauty of a home equity line of credit is you only paying what you owe on it.
Perfect.
So if you have a $100,000 line of credit and you only use $50,000, you're only paying on $50,000.
Right.
And when you pay it back, you can borrow it anymore.
Perfect.
It's just like a credit card that way. But but you're only paying what you use.
Wonderful.
And so it's nice to have that line of credit and for emergencies, or if you wanted to borrow against the equity to purchase another property. And so we see that a lot too.
Okay.
And so that we offer those programs. We also have a HE loan, which is a fixed second. So some people don't like the variable rate part of the home equity line of credit.
Okay.
And they don't like the fact it could go up.
Right.
They've been through the 2008s we were talking earlier, and they don't want that rate to go up.
They don't want that adjustable.
So we have a fixed rate second. It's called a HE loan.
Okay.
And home equity line of credit or loan. So it's fixed. It enables you to do that because the home equity line of credits are typically interest only. They have an interest-only option, so your payments are really low.
Okay.
So even though the rate may be higher than your first, your payment's going to be really low because you're only paying interest only.
And is there a balloon payment at the end?
What happens is they have a draw period. So you're allowed to draw on it for, let's say, some are 10 years, some are 20 years.
Okay.
Once that period's over, let's say it's 20 years, it stops, you can't draw anymore, and then it amortizes for the remaining balance.
Okay.
So it's a 30-year term.
Perfect.
But it has a draw period under 10 years, let's say, or 20 years.
Wonderful.
And so each of these are another option. So again, we talk to the clients. What is your best option? What are you looking to do? Well, I want to invest in real estate. I want to borrow from the equity to buy. Do you have a mortgage? Great. Well, here's what we do. And we show them options. You either sell to buy, you borrow against it to buy, or you saved up and you go that avenue. Because now you have 2 payments on that house.
Exactly.
And we have to qualify you with 2 payments. Then you're buying another house. Now you have 3 payments.
3 payments.
And can you qualify for all those payments?
Right.
Not everybody can qualify for just 1 payment, let alone 2 or 3 payments. Exactly. And so doing that line of credit is not for everybody.
Right.
But it's an option for the clients. And how would we know your client is available or qualifies for that until we go through the steps of asking them questions?
Again,
and so, when I talk to my clients,
relationship and education.
Correct. And that's what it's all about, is just educating them on it. And I spend the majority of my day just talking to clients about their situation, gathering information so I can give them an informed decision or put them on that path. And
perfect.
A lot of buyers are just very happy knowing that they can call with questions.
Exactly. Because it is such a time that they feel out of control. They feel uneducated. They don't know the process, and they're relying on the professionals to guide them and to give them the information and education.
Right.
And with that, I want to say thank you so much, Mike. This was such a great topic.
You're very welcome.
And Mike, how can people reach you?
Well, glad you asked. My website is the easiest way. Okay. It's www.thelenderwhocares.com. Or my cell phone, I always have it on, is 909-725-1627. I'm local here in Corona. I've been here for 34 years, and I'm here to help you through the process. But I'd love the opportunity to meet with you, talk with you. I don't just direct you to a website to go fill out an application. I help you. I will sit down with you on weekends and evenings. I really actually enjoy that better than just blasting someone over to my website to take an application, because every lender has that. Yep. But I want to get to know you and get to help you through this process. So I'll take the time to do that and meet with you.
And you're licensed in every state? Pretty
much licensed in every state. I think New York I can't do a loan in, and Hawaii there's restrictions on it. But
both are really high priced.
Yes.
So we're good. Stay in California.
Most other states I'm licensed to do the loans on are in, and we can help you with pretty much anywhere you're looking to buy.
Awesome. Thank you, Mike. I so appreciate your time.
You're very welcome.
We look forward to seeing you on the next episode of Porch to Portfolio.
Thank you.
Thank you for joining us on this episode of Porch to Portfolio. Be sure to subscribe to the podcast so you never miss an episode of expert resource and tangible insight for real estate and investing. You can follow us on our social media channels below.